In a world of decreasing privacy and increased litigation, and in a world where your digital footprint is becoming more and more and more pronounced, in a world where anonymity is fleeing, I guess I've always really respected and enjoyed the benefit of owning an asset that is not simultaneously the liability of a third party, owning an asset that I don't even know how much I have sometimes and requires me on a annual basis to count what I have and what I've added and what I've subtracted. And it's very analog in a very digital world. And you can see even our currency is becoming more digital. Our banking is digital. We access our home and our cars, and everything now is in our hands with the digital application and a digital footprint. And I take some sort of, it gives me kind of an inner peace, so to speak, in a weird way. And I guess I've really never articulated it, but I've always understood it and embraced it.
In this intriguing and eye-opening video, precious metals expert Andy Schectman uncovers a hidden truth about the silver market that will leave you stunned. As the world becomes increasingly digital and privacy becomes scarce, Schectman highlights the importance of owning assets that are independent of third-party control. He emphasizes the rising significance of gold and silver in a world filled with counterparty and systemic risks. Schectman reveals a startling trend that has caught the attention of both experts and traders alike. He discusses the phenomenon of exchange for physical, EFP, and how it has led to a massive drain on the London Metals Exchange. Astonishingly, a mind-boggling 1.13 billion ounces of silver were taken for EFP in 2022 alone, exceeding an entire year's mine supply. But that's not all. Schectman delves deeper into recent developments that hint at a game-changing shift in the market. Prominent players are leaving the rigged casino, selling off their long silver contracts and exiting the system, thus gaining independence and removing counterparty risk. As the video reaches its climax, Schectman drops a bombshell. He reveals the actions of a well-known bank, Standard Chartered Bank, that seems to be making a bold move that could signify the impending end of this suppressive market. What does it all mean? Watch till the end to uncover the shocking truth and gain a fresh perspective on the world of precious metals. Don't miss out on this crucial insight that could shape your financial future.
In a world where counterparty risk and systemic risk is becoming more pronounced, there is something to be said for the independence you get, and pun intended, of course, from having an asset like gold and silver that really are free from that. And I think we're beginning to see that. Well, not beginning, we have seen that. This is something I've talked about with you for a very long time, and I noticed it in 2020 with the rise of the others. We've talked about that a lot on Comex, where in 2020, this group of traders that was new to the Commitment to Traders report, typically it was just the commercial banks and the specs or the hedge funds that were listed as the largest traders and their positioning on the Commitment to Traders report. That report that's published weekly by the CME group shows the positioning of the largest traders, two groups until there was a third, the others, who took more silver in 2020 than we typically see in the decade. And that trend continued in 2021, and it started to catch, I think, too much attention. And not just by guys like me and you, but too much attention from everyone, and maybe the traders. I don't know who rattled the bushes enough, because we talked in 2022 about this phenomenon called exchange for physical. Exchange for physical is a very opaque way of taking a contract that you have on Comex that would otherwise stand for delivery, and instead you shift it over to the London Metals Exchange and you take delivery there. Get this, 1.13 billion ounces with a B were exchanged for physical in 2022. How many people know that? 1.13 billion ounces, more than an entire year's worth of mine supply, was taken for exchange for physical off the London Metals Exchange. And maybe this is why the LBMA came out with a letter at the end of 2022 saying, if we see deliveries reminiscent of 2022 here in 2023, there will be nothing left to deliver. Last month in June, we saw 110 million ounces delivered in exchange for physical that would have otherwise been delivered on the Comex. The preceding 2 months before that, previous 2 months, somewhere in the neighborhood of 230 million ounces. Do you see a trend? So they I think, got too much attention here on the Comex and now have shifted it to the LBMA and are draining the exchanges as the price has come down. And interestingly enough, June 30th was the last day for the July delivery contract for everything to be in. And we saw what is normally a very prominent player in the futures market perhaps leave for good. Now, this is a very strange month where we saw almost 150 million ounces in open interest just disappear. And what was strange about it to me was the managed money that actually sold, 20 million plus ounces of long silver contracts and then disappeared. Now, they didn't go short the way they normally do. When they sell their long, they usually go short, take the other side. They just left the rigged casino. But more relevant than that was Standard Chartered Bank, who had to come up with 12 million ounces of silver. And if you look at the registered category, it increased to 38 million ounces of registered silver. People may get nervous by that, but you watch, after the July deliveries take place, you're going to see that number drop by 12 million ounces. And what was very interesting about it is Standard Chartered Bank has less than 5,000 ounces left on the Comex in their eligible account. That's less than one contract. And what is okay, because the 1,000-ounce bars are never exactly 1,000 ounces. They're like at 4,900 ounces. This is a very prominent player who looks like they are leaving the casino. And arguably, that's exactly what you see these traders, whoever the hell they are, standing for delivery in exchange for physical and leaving the casino, removing counterparty risk that gives you what? Independence. Independence from the rigged environment. And it betrays the price. It betrays the price. And I just need people to understand that to go to this kind of inordinate effort and take the metal off the exchange, to deliver it off the exchange, says something tremendous. It is that the most sophisticated investors are using this rigged market to leave the system and gain independence. I'm going to keep using that word here since it is the July 4th holiday, but there's something to be said for that. And I think that people need to really understand what this means. And when you see a player like Standard Chartered Bank, who has been very active in shorting metals, all but sell everything they have or deliver everything they have, it tells me that maybe they realize this is a game that is very quickly ending, because you can only suppress a market for as long as there is fuel to suppress it. And if you don't see the managed money take the other side of these short positions, when you see the commercial banks cover 35 million ounces this week, something's going on. And I think that people should pay attention. It's very intriguing to me as it pertains to kind of the trickle-down effect from supply, which many people like Andrew Maguire are saying there is a wholesale shortage.
As we reach the end of this captivating exploration into current economic events, I hope you've gained valuable insights into the ever-evolving financial landscape. Remember, staying informed about the latest economic developments is crucial in today's interconnected world. By understanding the forces shaping our economy, you can navigate the uncertainties and seize opportunities that arise. Whether it's market fluctuations, policy changes, or global trends, staying engaged with economic news allows you to make informed decisions that impact your financial well-being. Stay curious, stay informed, and don't forget to like, comment, and share this video.